only for the upload submissions of your answer. Yeah, handwritten. So your answer should be handwritten. Okay. Any questions that you have? Any of you have a questions there? Regarding your exam tomorrow, so clear about that one, yeah? 32 of you. Is it clear about that one? Is your guidelines? So you already, I've already uploaded the guidelines there in your online. Your answer booklet also, and a pledge form, yeah? Okay, so make sure that you submit answer and pledge form. Okay, together. Okay, and then please scan and submit through online. No email, no WhatsApp, unless you really have a problems when you try to submit your answer. And then if you have, let's say you have a problem, you cannot access to the question, please inform me by 9:30 tomorrow if you have a problems. Okay, it's not yet 9:30, maybe your online is not yet ready there. Okay, the question is not ready there. Okay, so any questions? So clear, Chong said clear, Naura also clear about that one. Chang also okay, Pua also okay, so we proceed with the notes, yeah? Okay, so I've stopped sharing this one, not waiting for another 3 members here. So we're going to proceed with your notes. We still have to proceed with your notes, yeah? Nothing much to discuss about your mid-sem, but please redo again. Question 1, question 4, and question. Okay, that one is 10% marks for your mid-sem, 10%. Okay, so we proceed with your notes. I'm start sharing your attendance here, so we're going to proceed with your notes. Okay, last time we stopped at slide. Any of you remember which slide that we stopped last time? Is it this one done or not yet? This one, isn't it? Last time. Because your class is different from a previous class. So which one that we stopped? Which slide that we stopped last time? Is it this one that we're supposed to continue? Any of you there? Okay, today 25. Thank you, Boa. Okay, Najwa also, thank you. So today 25. Okay. So we proceed now. Proceed with that one. So maybe I missed some things in your box, the chat box here. If you have anything, please voice out, yeah? Unmute your mic. Okay, so we're going to look at the next one. The next one, you have the previous one. We look at the increase in the shareholding, which is step by step. Step by steps here. Oh, okay, step by step. Maybe we choose another color. Okay, we're going to have step by step. Step by step here means that you start with a share less than 50, then you add some more, then it become more than 50. This one is step by step. So for step by step here, you need to calculate gain on remeasurement. Gain or loss, gain or loss on remeasurements. Okay, now we're going to look at the second one, increase in the shareholdings in a subsidiary, shareholding interest in a subsidiary. So this one, in this case, you already have a control. You already have more than 50%, but you add some more shares, add more shares, add some more shares. Maybe you add another 10%. So now you see you become more control. Your control, you still have control, and become your 60%. Okay, this one was an increase in the shareholding interest. Already control, but you add some more share. The previous one, you don't have a control, you add some more share until you have more than 50%. So the interest increase the parent interest and decrease the NCI interest. So when you increase the parents, so parents add some more shares. So parent increase means that the NCI is going to decrease. Okay, examples that we have here on 1st of January 2018. Okay, you have 60%. So 60% here, you already have a control, so more than 50%. Okay, it become a subsidiary. And then you add more, another 10%. So now it become 70%. You have more controls. Yeah? Okay, if you look at the NCI, previously NCI is 40%. And then when the parents acquire additional 10%. They acquired the additional 10% from NCI. So we're going to minus from the NCI. Now the NCI become 30%. Yeah? Okay, change instead after acquisition date. So means that changes after the acquisition date means that you already have a control. So should be accounted as an equity transaction. We're going to account it as equity transactions between parent and NCI. Only two party going to involve, parent and NCI. Parents going to buy share from NCI. Yeah? Okay, no gain or loss going to be recognized. No gain or loss going to be recognized. This one we have a step by step. We have gain or loss, but for increase in a shareholding, no gain or loss here. Any difference between the carrying amount of the NCI, the carrying amount of the CI, the stake that you acquired. For example, here this 10% that you acquired, and the fair value of consideration paid, if any, should be recognized directly to the equity. So it become a movement in equity only. Movement in equity. No gain or loss going to be recognized. Okay, for the goodwill here, there is no changes in the goodwill here because goodwill is only calculated once at the date when you have a control here at this one. So your goodwill here is already calculated here. So once it become, when you add some more shares here, you don't have to calculate a new goodwill here because you only use the goodwill is calculated only once at the acquisition date. Okay. So we try to look at example 3.3. Okay, AB acquired 70% interest in XY on 1st of January 2017 for the cash considerations of 21 million. So we're going to calculate this one on 20 COI here is 21 million. Yeah? Maybe I need to use another color, a brighter one. Okay, 21. And then the net asset that we have here is 10 plus 10. Yeah? So 20 here. And then it said that the fair value of 30% NCI, the fair value here is already 9. So the value of the NCI measured at fair value is 9. If measured at fair value is 9. Yeah? Okay, on 1st of January 2019, AB purchased another 10% interest in XY from the shareholders of XY. The cost of investments here is 7 million. So you bought an extra additional 10% interest. Now your interest become 70 plus 10, so become 80%. Parents have 80%, means that the NCI have another 30 minus 10, so NCI have a 20%. Okay, to acquire this 10%, okay, AB paid 7 million. So to acquire this 10%, the additional one, they paid 7 million. So, okay. So this is what you have, the taxation, so the profit. So please pay attention to this figure and also to this figure, the profit for the year and also the returns earning brought forward. Yeah, later on I'm going to use this information. Okay, and then this is the statements of financial position, and then you look at here, the investment in XY become 28, where this one is at the 2017 and then plus another 7 in the year 2019, 1st of January 2019. So now it become 28. Yeah? Okay, now we need to calculate the goodwills on consolidations and then prepare the consolidations journal entries. Yeah? So goodwills here, so goodwill, we try to calculate using both methods. Yeah? Okay, but in the questions, it's going to mention which method that we need to use. So this one is only for the illustration. We try to calculate both methods because I want to show you the difference between that two methods. Yeah? Okay, so now we're going to look at, remember that the goodwill is only calculated at the acquisition date. Yeah? Okay, the value, the figures that we use here is at the acquisition date. So the cost of investments that we have here is 21 million. Okay, and then for the NCI here, NCI is 6 million. We have to get that 6 million during this time. The portion of NCI here is 30% time with the 20 million. 20 million here, RE is 10, shares capital also 10. Yeah? Then you time with 20 million, so you're going to have 6 million. So altogether you have 27. Fair value of net identifiable asset 20. So the goodwill here is 7. This 7 is solely to parents because this one is based on net identifiable asset. Okay. And then the other method is NCI is measured at fair value. So cost here is 21. 9 here is given. Yeah. Okay, said that the fair value of the NCI here is 9 million given. Refer back to slide 26. Okay, so 9 million. So you total up become 30. So net asset 20. So you're going to have a goodwill of 10. So from this 10, 7 to parent, based on this calculation, is only to parent. So it means that another 3 here is to the NCI. Okay, so this is what you have here. Okay, now we're going to calculate the movement in the equity. So movement in the equity here, we said that there is no gain or loss going to be recognized. So we only have a movement in the equity. Yeah? Okay, so in this one, in the case when the parents bought some shares here. Okay, look at the NCI here. So why we going to look at the NCI here? Because of that we bought shares. Parent bought shares from NCI. Yeah? Okay, so we need to look at the NCI parts. So the NCI on 1st of January 2017 is 6 million. This one is based on the fair value, and then this one is based on the, this one is based on the net asset, net identifiable asset. This one is based on the fair value, 6 and 9. Share of post acquisitions profit. Where to get this figure? Shares of post acquisitions profit here, you need to look at the RE brought forward. Okay, minus RE at the acquisition date because you want to find post RE, yeah, post RE. So RE brought forward minus RE at the acquisition date. So you have 21. So this 21 need to time with 30%, yeah. So time with 30%. So you're going to have 6.3, yeah, 6.3 here. So they carry same as this one, yeah. The carrying amount become 12.3 here. This one become 15.3. The difference here because of this figure, difference figures, yeah. So you're going to have 15.3 here. Transfer to parent. Okay, transfer to parents here, you only transfer, NCI only transfer 10% of its shares. So previously NCI has 30%. So we need to transfer here 10 divided by 30. Okay, 30 here is the previous hold by the NCI. Yeah? So 10 divided by 30 to find the carrying amounts here. So this is the total carrying amount. So 10 divided by 30 time with 12.3. So you're going to have 4.1. And then for this one is 10 over 30 time with 15,300. So you're going to have the difference figure. This one is 4.1, this one is 5.1. Yeah? So now the NCI only have 20% interest carry forward. 20% from 30 and then sold 10 to parents. Yeah? Sold 10 to parents, now it becomes 20%. 20% carry forward. So the value or the carrying amount of the 20% shares of the NCI here under the net methods here or net identifiable net assets methods here, we're going to have 8.2, and then for based on the fair value, the value become 10.2. Yeah, so that is the difference. Any questions that you have for this one? The first one, movement in the equity. We said that there is no gain or loss. We only record as a movement in the equity. Yeah? Okay, so we proceed now. So the movement in the equity. Okay, so you're going to look at the difference between cost of investment. Okay, the first one, the previous slide here is you want to find the value of carrying amount. You want to find the CA of investment. Yeah? Okay, this is a method to calculate the CA. So this one, we need to know about this figure. Okay, So now we're going to look at the movements here. So movement in the equity here is the cost of investment. Cost investment is the additional investment, yeah, the one that paid by parents, yeah, paid by parents to acquire 10%. Okay, so parent paid 7 million, yeah, 7 million for both. And then change in the NCI here, change in the SCI here is 10 divided by 30 times with the carrying amount. So carrying amount under net identifiable asset, the change of that 10% has a carrying amount of 4.1, and then this one has 5.1, yeah. Okay, and then we're going to have a negative movement here is 2.9, and then this one is 1.9. The difference between 7 minus 4.1 is this one is 7 minus 5.1. Why we have a negative movement here? So negative movements here means that you need to debit the RE. Yeah? So once parents buy or bought a shares, so it's going to reduce its equity. Yeah? So you're going to debit the RE. So that's why we said that we have a negative movement in equity. Yeah? Okay. So prepare a journal entry. Okay, for the journal entry we have here. Okay, this one is on for the elimination of the CI. So figures that we use here should be at the acquisition date. So during that time, parents still owe 70%, time with 10 million. So you're going to have 7 million. Same for the return profit. Okay, goodwill for parent and the investment in the COI. Yeah? Okay, 21. Okay, and then the next one is for the NCI. Okay, for NCI, we have two journal entry. One is share for profit, and then the other one is for the net asset. Yeah? Okay, for shares of profit here, profit for the years here. Okay, because the parent bought shares. Okay, parents bought. Okay, on 1st of January 2019. So starting from 1st of January 2019 until 31st December 2019, NCI only have a share of 20% because parent bought during this date. Yeah? So now NCI only have 20%. So this 20% need to time with the profit for the year. So profit for the year is here. You refer back to slide 27. Yeah? So the profit for the year here is 4.2. So time with that 20%. So you're going to have here is 840. So this is to record the current year profit, shares of current year profit for the NCI. Yeah? Okay, just finish this one. If you have any question after this. Okay, and then we're going to look at the journal entry when we prepare the NCI using proportionate of shares. Okay, so the shares capital. So when you have proportionate of share means that there is no goodwill. So shares capital still 30% time with 30. But for returns earning here, you need to use a RE brought forward. Yeah? So RE brought forward here is 31. Refer to slide 27 or so, where this figure come from. So you're going to have returns profit 9.3. So total up this one, you're going to have 12.3. Yeah. Okay. And then the second one, we need to record for the negative movement. Okay, this is the second journal entry for NCI. This one, the third one here is to record for a movement. So negative movement, RE should be debit. So your RE here, how much the value of your RE here? The difference between cost of investment minus the changes in the NCI 4.1. Yeah? So you're going to have 2.9. Put it under debit side, yeah, because we have a negative movement. See? Okay, and then debit NCI statements of financial position here is reducing in the value of or the carrying amount of the NCI. Okay, the carrying amount reduce another 10%. 10% value here is 4.1. Yeah? This one, yeah? Okay, and then credit investment 7 million. Okay. This one is based on the proportionate net asset. Okay, the second method here is just capital NCI at the fair value. Okay, NCI at the fair value, shares capital is still the same, return profit still the same, but we have a new thing here which is a goodwill on consolidation. So the value here will be different, 15.300. Okay, and then for the movement here, still a negative movement. We're going to have compare cost investment minus changes in the NCI when the NCI sold 10%. Yeah? So 10%, based on the fair value, the value is 5.1. So the difference here is only 1.9. Yeah? So 1.9 here is a negative movement in the equity. So debit RE 1.9. Segments of NCI at financial position based on this value, and then credit investment still at 7 million. See? So this is what you have. Okay. Any questions that you have for this one? So if you look at here, when you use a fair value method, okay, for the NCI, the negative movements here will be lower as compared to the proportionate net asset. And then remember that when parents sold, sorry, not parents sold, parents buy, they're going to have a negative movement, yeah, because it's going to reduce the RE. Yeah? They're going to have a negative movement. Because later on, you're going to look at the disposal. When parents sold, it will be the other way. We're going to have positive movement, going to credit the RE, increase in the RE. Later on, we look at the disposals. So any questions that you have for the increase in the shareholdings? Okay. Any questions here? Any of you have a questions? No, so we proceed. Some said no, so far okay. So we look at the disposals. Okay, disposal of shares in subsidiaries. Okay. For sorry. For a disposals here, we have a few categories. You dispose here means that you sell. Parent sell its shares. So when parent shares its shares, means that parents percentage will be lower, and then the NCI will be increasing. NCI be increased. Okay. Okay, should be okay. So for a disposal, we have a few types of disposal. Okay, the first one, you have 100% disposal. 100% disposal means that there is no more subsidiary after this, because you sold all the shares that you have in the subsidiary. Okay, for the second one, we have a partial disposal. Okay, for a partial disposal here, we have a few types under partial disposal. The first one, you retain a control. So retain a control, remain as a subsidiary. So for example, here you have 80% and then you sold 10%. So now your shares here, parent share is only 70%. You still have a control. See? You still have a control because your share is 70%. Okay, the second one is you lost a control. Lost a control and change to associate, and then the other ones, loss of control, change to that as a simple investment. For example, here 80%, you have 80% and then you sold 40%. So now your share here is only 40%. No more control, but this one is considered as an associate because your share is more than 20%. This one 80%. Let's say you sold 70%. So means that you only have 10%. So you already lost a control, no more control. But this time your investment is considered as a simple investment, or sometimes we call this one as a fair value, others comprehensive income. Just a normal investment, just a simple investment. Yeah? Because your shares here is less than 20%. If that one is more than 20%, become an associate. Yeah? So that is loss of control. We have two types. Either you become associate or make it as a simple investment. Yeah? Okay, we have a problem with the disposals here because the difference gain or loss on disposal from a parent view and a group view. So we have a different point of view. For parents view will be different in terms of the amount of loss or gain or loss, and then the group view will be different. Yeah? So we're going to look at this one, the calculation. So we have a formula for this one to calculate a gain or loss on disposal. Okay, based on the parent view. Okay, for the parent view, the fair value of consideration received, how much do you receive from the NCI, okay, plus with the fair value of the residual interest, and then plus gain in the previous reported others comprehensive income, minus net asset and goodwill derecognized, then going to have gain or loss on disposal. Or another formula, which is a simple one, most of the time we are using this formula, sales proceed minus cost of carrying value of the share disposal, then we're going to have gain or loss on disposal. Sales proceed minus carrying value of the share disposal, then we're going to have gain or loss on disposals. Okay. So remember this one, the formula, this one is for parents, yeah, for parents. Okay, the next one for shares group view. Okay, we have parent view and then we have another one is a group view. For a group view, we have two methods to calculate gain, yeah. Okay, the first one is a cost method, so you don't have to worry in the exam. We're going to mention which method that you're going to use, yeah. Going to mention in the questions, yeah. Okay, for the cost methods, okay, the sales proceed minus COI, then you're going to have gain of parent, okay, and then minus realizations of post acquisition reserve, yeah. So post acquisition reserve including your RE brought forward, and also the shares of current year profit up to the disposal date. Up to disposal dates only. Shares of current year profit up to disposal date, and then add a goodwill impair, and then gain or loss on disposal. So actually we're going to find, based on the cost method, you find the gains for parents, okay, and then make an adjustment. So the adjustments here we need to minus, okay, RE brought forward, and also minus current year profit up to disposal date, okay, and then last, if there is any goodwill impairment, if there is a goodwill impairment, yeah, then you're going to have gain or loss for group. Okay, so this one we calculate the gain for parents and then make an adjustments here we need to minus RA brought forward, see, current year profit up to the disposal date, and then plus goodwill impairment if any, and then we're going to find gain or loss from the group. Another method that we use here for the to calculate the gain for the groups here is using a net asset method. Okay, for the net asset method, the sales proceed, how much proceed that you receive, minus net asset at the disposal date. Net asset at disposal date, which consists of shares capital, pre-acquisition reserve, post-acquisition reserve brought forward, and also the current year profit up to the dates of the disposal, and then minus the remaining goodwill, and then you're going to have a gain or loss on disposal. So you need to remember that for the group profit, to calculate group view, based on the group view we have two formula, cost methods, and then the other one is net asset methods. Which method that you're going to use is depend on the question, but at the end you're going to have the same amount of gain or loss, regardless what method that you are using, yeah? Okay, so we try to look at the first one. The first one is once you have a total disposal, means that you dispose 100%, yeah? Disposal 100%, so the equity share in a subsidiary become nil, become zero, no more subsidiary because you dispose 100%, yeah? Adjustments of the gain or loss on the disposal need to be done in a current year consolidated profit or loss account. So you need to make an adjustment in a current year consolidated profit and loss account. Consolidated statements of profit or loss should include the profit and others comprehensive income made and returned by subsidiary during the period prior to the disposal. So your income statement only need to consider informations before the disposal date. Yeah? Let's say you're disposed on 1st of September. So you only bother about these informations only. Informations after or figures after or items after 1st of September, you don't need to consider. You only consider this one. Yeah? Up to the disposal date only. Yeah? The return profit and other reserve Okay, gain or loss previously recognized in other comprehensive income brought forward should include the post-acquisition profit and other post-acquisition profit of the subsidiary that have been recognized at the end of the previous year. Okay, so that is why. Yeah. So we try to look at the example for this one. Yeah. Okay, for example, this one, we're going to look at example 3.4. Okay, A, B acquired 100% interest in XY on 1st of January with a cash considerations of 14 million. Yeah? Net asset XY. Okay, shares capital 10 and the RE here is 2. So the net asset here is 12. Yeah? Okay. Then it said that on 30 of September 2019, okay, 30 of September 2019, during this date, you dispose, sold entire, so you dispose 100%, okay, 100% into XY for a cash considerations of 19 million. So if you look at here, you dispose 100%, so you receive cash here, fair value consideration 19. The carrying amount here is 14, so means that you're going to have a gains of 5. Yeah? So this gain is gain for parents view. Yeah? Parents view. Okay, so this is a financial statement that we have here. So look at here, you have gain on disposal of share. If you don't want to calculate, it's already given here. Okay, 5 million. So because this is a statement on 31st December, because the disposal was happened on 30 of September, so it's already have these kinds of gain in the statements. Yeah? So it's already given here. Okay, look at here, the profit that we have here. This is information that we're going to use later. 1960, and then this one is 3640 is RE brought forward. Okay, so now this is a statements of financial position. Okay, the fixed asset. So if you look at here in the statements of financial position, there is no more investments because you already dispose 100%, no investment. Okay, calculate the gain. Record the conciliation journal entry and then prepare a financial statement, a consolidated financial statement. Gain, we already calculate previously. Okay, 19 minus 14, so you're going to have gain 5. Gain 5 for parents here. Okay, this one is gain for parents. So from gain from parent, we make an adjustment. Okay, adjustment to find for the gain for groups. Yeah, gain for groups. So the adjustment that we have here, this is the adjustment, the adjustment that we have based on the cost method. Okay, even what method that you are using, the simple one is a cost method. So assume that we are using the cost method. Later on, example 3.5, we're going to have another method, net asset methods. Okay, we look at this method. I think this one also has the net asset method. We're going to have both. Okay. Oh, no, the other one, 3.5. Okay. So we're going to look at here, this one is based on the gain on parents. We have 5, and then from that 5, we're going to make an adjustment to find gain for groups here. Okay, adjustment, the first adjustment here is RE brought forward. So RE brought forward, we should have, okay, because it's a word post acquisitions only. So post acquisitions for the RE here, so brought forward, need to minus the RE at the acquisition date. Okay, because you want to find the post only. Okay, so 3640, where this figure come from here is slide 42. Refer to slide 42. RE brought forward 3640, and then RE at the acquisition date is given in slide 41. 2 million. Yeah, so you're going to have 1640. And then shares of current year profit. So shares of current year profit is up to the acquisition date. Up to acquisition date. Up to the disposal date. Up to the disposal date. So we only have 9 months. So profit for the year, this information is from slide 42. You have 1960. This 1960 needs to time with 9/12 because we only hold the subsidiary until the end of September. So you entitle a profit until the end of September. So you need to portion this profit because the profit that you have here is up to 31st December. So we need to portion this one with 9/12. Yeah. So we're going to have 1470. Okay, so this is the gain for groups. Yeah, 1890. Okay, any questions that you have for this one? Any of you have a questions? So we proceed now. Proceed with the journal entry. Later on if you have a questions. Yeah? Okay, journal entries that we have here. Okay, so journal entry, we need to record two things for journal entry. Okay, the first one, you need to record the shares of RE. Okay, shares of RE from the adjustments here. Okay, so this is the journal entry that we need to prepare. Okay. The journal entry here is for the adjustment. Yeah? Prepare the journal entry for the adjustment. So adjustment that you have here, the first one is adjustment for the RE, and then the second one is a current year profit. Also, we need to prepare two journal entry. One is for the RE, and then the other one is for the profit. Yeah. Okay, we look at the RE first. Okay, for the REs here, we're going to credit RE brought forward 1640. Why you credit the RE here? Because your RE have been increased, yeah, because the disposal, your RE will be increased, yeah, and then debit gain on disposal of shares, yeah, debit gain on disposal of shares. Okay, and then the next one we need to record for the current year profit. So any items that you have in the segments of comprehensive income, you need to time with 9/12. So we refer back to slide 42. Okay, this slide 42 here, all of this item up to this one, sorry, up to this one. Okay, need to time with 9/12 because you only hold that one for 9 months. Yeah? Okay, so for the RE is gain disposal and then credit returns only. And then for the profit for the year, so for profit for the year here, item in the income segments, debit expend, debit transactions, credit turnover, and then this is again on disposal of shares, 1470. This one is from your calculation previously. Refer back to slide 45 here. This one is slide 45. Okay, this is your turnover. So this one is to prepare a consolidated result up to 9 months only. Yeah. Okay, we look at this one. Okay, I just finished with this one. Okay, if you look at here, the value for X here becomes 0. Okay, why it becomes 0? Because this one is a total disposal. Okay, so you don't have any subsidiaries. Yeah? Okay, so this one is for 9 months activities. Yeah? This one is 9-month activity. 9 month, okay, 9-month profit or expenses. So everything you need to time with 9 months. So we're going to have here for turnover 10 plus 5.1. For the expense here with 15. Just add these two figures. Gain on disposal. So gain on disposal. Okay, if you look at here, the gain on disposal of 5. This one is for parent. The parent need to adjust with to find a group view. For the group view, we need to adjust for the RE. And then the second one adjust for a current year profit. Yeah? Yes, so we're going to have at the end 1890 profit before taxations. Okay, these two figure minus and then plus this one. So we have 1990 minus tax plus these two figure. And then we are going to have profit for the period. Profit for the period plus RE brought forward. So RE brought forward, you need to debit 1640. 1640, the one that you debit here. So it's not debit, credit. It's a journal entry number 1, the first one, journal entry number 1. So you're going to add these two figures, 7840. At the end, you're going to have 8,000. So assume that AB has to prepare group account unconsolidated under with other subsidiaries not shown. Assuming that AB only have one subsidiary. Okay. So that is what you have for the statements of comprehensive income. And then for the statements of financial positions here, for XY here will be 0. So the one that we left here is only the parents. For the groups here, you only left here is parent for the groups. Okay, assuming that you have another subsidiary, but we don't show that one, we only show the one that we dispose. So any questions that you have for a total disposal? Any question? For a total disposal means that you sold all the shares that you have in a subsidiary. So we're going to recognize gain. So gain will be difference from a parent's view and the group view. So from parent's view, we find again the difference between the how much consideration that parent received minus the carrying amount of the COI. And then from that gains, parent gain, now we need to make an adjustment to find for a gain for a group. Adjustments here, we need to minus the beginning RE brought forward, and also that one is related with the post acquisitions RE, brought forwards, and then the other one is a currency profit. Okay. Any questions that you have for total disposal? Any of you have a questions here? Any questions? You want to proceed with the next one? No questions, sir? Are you still there? Okay, no question, so we proceed now. We proceed with the next slide. Okay, disposal on a share without retentions of subsidiary. So you dispose the share, but you still have a controls over the company. Okay, this treatment is the same as what you have. Okay, it will be the same. The same when you have the treatment is similar when you have the increase in shareholding. Okay, remember that you have a movement in equity. Okay, because you still have a control. Increase in the shareholding, you're going to have a negative movement. But for a disposal, we're going to have a positive movement. The treatment is the same. Okay, the same. Okay, now I'm going to look at this one. Disposal of share with a retentions as of a subsidiary. Okay, these types of disposals need to be done in a currency consolidated. This type of disposal will decrease parents' equity, going to decrease parents' equity, going to be decreased, and then increase the NCI equity. In NCI will be increased. If we look at here, it will be the other way. Parents will be increased, NCI will be reduced. Okay, so the treatment is similar. Okay, so we look at here. On 1st of January, your interest is 70%, and then you sold 10%. So now parents only have 60%. So souls here mean going that you're going to sold to NCI. So NCI we add another 10. So now NCI become 40%. Yeah? Okay, these disposals are accounted as a equity transaction. Similar, I'm going to record it using the equity transaction. There will be no gain or loss recognized in the statements of comprehensive income. No gain or loss here. Okay, any difference between the carrying amount of interest disposed and the fair value of consideration received, if any, should be recognized directly in the equity and attributed to the owners of the parent. So this one is only a movement in equity. No change, no gain or loss going to be recognized. Okay, the adjustments on the disposal need to be done in the current year, consolidated statements of comprehensive income. The carrying amount of the NCI should be adjusted to reflect the changes in the parent interest. So you need to adjust the NCI. The carry based on the carrying amount of the interest disposed transfer to the NCI. So when you dispose means that you're going to transfer from parent to NCI. Okay, the CA of interest disposed, okay, how many percent that we dispose here is equal to the COI plus post acquisition profit or reserve. Okay, so we're going to look at this example. So you dispose but still controls that company. Yeah, this one is only a movement in equity. Yeah? Okay. We're going to look at example 3.5. Okay, so AB acquired 80% interest in XY on 1st of January 2017 for the cash considerations of 14 million. Yeah? The net asset of XY at the dates were represented by the shares capital of 10 and 2. So NIA here is equals to 12. Yeah? COI paid was equals to each shares of the fair value of the. Okay, so please understand this one. Okay, it said that the COI paid. The COI paid here is equal to 14 million. This 14 million is equal to the fair value of XY as a whole. Okay, so to find the fair value of XY, we need to use the COI, then divide by parent percentage here to find the fair value of XY. Yeah? Before this, if you have information for the fair value of NCI, so to find the value as a whole, we're going to use the fair value of NCI, okay, divide by percentage of NCI. So in this example, we only have informations about the parent. So it said that the parent investment is equal to the fair value of the XY as a whole. So fair value as a whole is a fair value of the company. Yeah? So to find this one, the COI here, to find the value of the company here, the COI is 14. And then the interest, the parent interest is 0.8. So the value of the company that you have here, okay, will be 17.5. So 17.5 here is a value of X1, value of the company. Yeah? Okay. It said that on 31st March 2019, AB sold 2 million shares in XY. Okay, 2 million shares in XY. If you look at here, the shares capital of XY, you have 10 million. 2 divided by 10 here, so means that you sold 20% shares in XY. Yeah? Okay, for a cash considerations of 8.5, so means that NCI need to pay, again, NCI pay 8.5 to acquire 20% interest from parents. Yeah? Okay, acquire 20% interest from parents. So NCI need to pay 8.5 because now parents going to sell the shares to NCI. Okay, the tax rate is 30%. So this is what you have. So this is, okay, if you look at here, there is a gain on disposal is already given here. Because you sold this one on 31st March. 31st March means that you only hold for 3 months only. For that year, for year 2019. Yeah? Okay, so gain on disposal, gain for parent. This is a gain for parents, so we need to make an adjustment later. So this is a profit, information that we need to know, and also about this one, RE brought forward. Okay. Okay, now you look at here, the investment in XY at cost here is only 10.5. So you know that at the beginning we have 40 million. Now it becomes 10.5, means that the one that you dispose here is 3.5. Yeah? So that is what you have here. Okay, you just analyze these informations. Okay, so we proceed now. Okay, now calculate the movement. Okay, prepare journal entry and financial statement. Yeah? Okay, so the first thing you need to calculate the goodwill here. So the goodwill that we have here, because you want to prepare the consolidated journal entry, so we need to calculate the goodwill. Okay, so this one is 17.5 here is the value of the XY, of the value XY. Where to get that one? So 14 divided by 0.8. So from that 17.3, sorry, 17.5, so we're going to minus the COI here, 14. So means that for the NCI, we're going to have 3.5 here. Okay, so that is what you have here. Then last net identifiable asset 12, and then you're going to have a goodwill here is 5.5 here. Okay, this is the calculations here. Okay, 5.5. Okay, from that 5.5 here, you're going to allocate to NC parents and also NCI. Parents 80%, NCI 20%. So for parents 4.4, and then for NCI 1.1. Is it okay with that one? Any of you have a question to calculate the fair value? Fair value, remember that to calculate the fair value of the company as a whole, either the value of the COI divided by the parent percentage, or the value of the NCI divided with the NCI percentage. Depends on what information is given in the question, the value of the NCI or the value of the COI. Okay, the fair value. Okay, so now we're going to calculate the gains to the group, not the gain. So we only have a movement, positive movement. Okay, so the movement in the equity. So the first one, you need to find the gain to the parents. So the gain to the parents here is different between sales proceed, okay, minus the COI. COI is a cost of investment. Yeah, cost investments here is 14 millions. Okay, that 14 millions here, you need to time with 2/8. 2/8 here is from the one that you have is 80%, you sold that one 20%. Yes, so 2/8. 20/80%. So you're going to have 3.5 here. So gain to parents here is 5 million. If you don't want to calculate this one, you refer to slide 52, there already mentions about the gain on disposals. So this is the same gain that we have here. Now we need to find the movement. Okay, movement or gain or loss. But in this case, we don't recognize gain or loss. The same method that we use to, the same form method that you use for positive movement, same method also we use for the gain. Yeah. Okay, so the first one we look at the cost method. So under the cost method, we already find the gains to parent. Okay, from the gains to parents here, we make an adjustment. Here we make an adjustment. So the adjustments here, we need to minus RE brought forward. Yeah. So RE brought forward here should be RE brought forward minus RE at the acquisitions date. Yeah. So we're going to, because we want to look at the post acquisition reserve. Yeah. So you're going to have time with 20%, so you have 3.8. So 3.8 here is a portion for the RE, yeah? Okay, and then the other one, another portion here is a current year profit. So current year profit, the total profit is 1960 for 1 year, but you dispose on 31st of March, so you entitled only for 3 months profit, yeah? So time with 3/12 and then time with 20%. So you're going to have here is 98, yeah, shares of the profit. So the positive movements here 5 million, 5 millions here minus 328 and then minus 98. So you're going to have 4574. This 4574 here is a positive movement. Why it become a positive movement here is because parent sold. So once parent sold here, parents going to receive some profit. Yeah? So profit here, we don't call a profit here. So we call it as a positive movement. This positive movement going to be transferred to your return earning. Yeah? Okay. So 574. Same method, okay, the same if you are using the net asset method, the other alternative working here when we're using the net asset method. So the fair value of consideration received 8.5 minus the net asset at the disposal, you have shares capital, pre-acquisition reserve, post-acquisition reserve, current year profit. So you have here 14,310 time with a percentage of interest disposed. You dispose 20%, so 2826, and then also minus the goodwill. The disposed portions here is 20%. So you're going to have a positive movement here 4574. So the same thing when you have under the cost method. What method that you are using here? At the end, the positive or negative movements here will be similar. Yeah? So you have 4574. Okay. Method. I think the cost method is much easier. Okay. Because the gain from the parents, you can find it from the income statement, and then you just make adjustment minus the begin RE brought forward and also the current year profit. Okay, so proceed now, and then we prepare the journal entry. So the journal entry, okay, the first journal entry here is to record for the eliminations of the COI. So eliminations of the COI here should be at the acquisition date, value at the acquisition date. So during that time, parents have 80%, time with 10,000, 10 million, return profit, time is 2, goodwill here 4.4, and then investment 14, yeah. Okay, and then for the NCI, Okay, NCI 20%. The difference here is only this part here. RE brought forward. So RE brought forward for NCI should use 3640. Different is this amount. For parent, we're going to use at the acquisition date. Okay, so RE brought forward, we're going to have 728. And then goodwill for the NCI 110. And then the NCI 3828. Yeah? Okay, I just finished with the journal entry. If you have any question after this, okay. And then the other ones we need to account for the NCI. So NCI has a portion for a current year profit. Portion for a current year profit. Remember that there are two journal entry for NCI. The first journal entry here is already prepared for the net asset in the previous one, previous slide. Now we are going to look at for a current year profit. Okay, for a current year profit, NCI have two portions. Okay, two portions here. Okay, because the parent disposed on 31st March. So 31st March, parent disposed. So during this time, parent has 80, NCI has 20. So during this time, NCI entitled for 20% profit. After starting from 1st of April until 31st December, okay, now the shares of NCIs has been increased, become 40%, 20 at the existing plus 20 that was sold by parents. So now the NCI become 40%. Shares of profit here need to divide into two. One is 20% up to for 3 months only, and then another 40% for 9 months. Okay. So altogether you're going to have 686 here. Debit comprehensive income, credit financial position. Okay, and then the last journal entry here is to record for a movement. Okay, adjustment on the gain and also the movement. Okay. So the next one, adjustment on gain. Gain on disposal for parents, we have 5. Okay. Investment in XY here, 3.5. Okay, where to get that 3.5 here is calculate. You calculate that one, calculate. The amount here is 3. Remember that you have 14 at the beginning in the statements financial position. You only have 10.5, means that reduced by 3.5 here. Okay. Okay. So you're going to have here 3.5 and then credit NCI segments of financial position, because now the share of NCI has been increased. Increased shares NCI shares has been increased, so that's why we're going to credit NCI. It will increase 8.5. So parent paid to the NCI 8.5. Okay, and then the last journal entries here is to record for the movement. To record for the movement here, we already calculate there is a positive movement. So positive movements here going to increase your RE. So increase your RE here means that going to credit your RE. So credit your RE, debit NCI. Why we need to debit NCI here? Because NCIs need to pay to parents, reduce in the parents in the NCI value. So you're going to have a positive movement here. Another thing to calculate your investments here is 2 over 8, 20% over 80% time with 14 million. Or another thing, you just look at the in the statements here. What is the last figure that you have for the investment? So your last figure shows that you only have 10.5. At the beginning you have 14, so the reducing in the investments here will be 3.5. Okay. So any questions that you have for this one? This part up to this journal entry. Because after this your statement, this is easy, just plus or minus them. Any questions that you have up to this journal entry? Any of you? Any questions? Oi, you have a question, Oi? No questions, so we proceed with the next one. Okay, the next one, you're going to look at the consolidated statements of comprehensive income. Okay, for consolidated statements of comprehensive incomes here, Okay, for XY, so we're going to look at that one. We still need to prepare because you still control the company. Yeah? So total up these two figures, the same thing. And look at the gains on disposals here. The gain on disposals here, you already eliminate this one. Eliminate. So can we refer back to this one? Just name to the journal entry. Okay, so this is a journal entry number 1. Okay, sorry, this is number 2. Okay, now use another color. Okay, so we're going to have this one number 3, number 4, and then this is number 5. Yeah. Okay, now we're going to look at the adjustments. Adjustments here. Okay, gain on disposal. So gain on disposals here, if you look at here, you have journal entry number 4, 5 here. Entry number 5. Minus here. Debit, so you're going to minus that one. 1, 2, 3. Oh, sorry, number 4. 4. So it becomes 0. Profit before tax, last taxation, total up, profit for the period. Okay, NCI here, on that amount here, we're going to allocate to the NCI. Profit for the period that we have here is 2560. 2560. From that 2560, we're going to allocate to NCI, journal entry number 3. Refer back to journal entry number 3. We allocate to the NCI 686. So the remaining to parents here is 1874. The remaining to parents after you minus this one. Okay, and then RE brought forward. So RE brought forward 5900s. Okay, and then this one is for XY. Okay, and then the debit one, 1.6 here. 1.6 here is journal entry number 1. 7 to 8 here is journal entry number 2. 54574 is the last journal entry number 5. Relate with the positive movements. Credit, positive movement, credit. So at the end, you're going to have 11686. Okay, so just total up. So at the end, RE carry forward 13660. Look at the statements of financial position. Okay, shares capital here is number 1 and number 2 journal entry. At the end, you have 20. Return profit here is a return profit brought forward. Okay, it's not brought forward, carry forward from the one that you have in a previous one. So this one will be your RE. And then RE here. So under RE here. For the NCI debit 4574. This one is the last journal entry number 5. Okay, the next one is 3828 here is journal entry number 2. 8500 is journal entry number 4. 686 is journal entry number 3. Yeah. So altogether for NCI here 8440. Okay, investments here. Okay, you have 10,500. Okay, you're going to debit 3.5 and then credit here is 14. Yeah? At the end, you're going to have 0. Okay, debit here is journal entry number 4. Credits here is journal entry number 1. Okay, sundry asset just total up. Goodwill here is both for parents here, number 1 and number 2. Okay, so that is the end for the statements of consolidated financial statement for positions and also for the income statement. Okay, proceed with the last one, the alternative journal entry. So whether you prefer these methods or the other method. So the alternative journal entries here, we are using now, parent is already at 60%. Okay, previously parent 80%, now minus 20%, parent become 60%. You just use this one, either method that you are comfortable with. Okay, for shares capital 60, the same thing, this one too. Goodwill also time with 60%. Investments here is 10,500. Okay, 10,500. Okay, for the shares capitals for NCI here 40%. I'm with 10. Okay, and then this one is 40 times 3, 6. The difference here we are using here 40 and 60. Yeah, goodwill here also for 40%. So NCI here 7656. Okay, and then the same thing, but this one is the same one. NCI, same thing for first 3 months. And then this one is for the 9 month. Okay, gain on disposal, you have 5,000. Okay, 5 million here. Credit NCI as statements of financial positions 98, and then return profit 4902. So please this one, change this one to 4574. Change this one, it's not 1, it's supposed to be 4. Okay, return profit that you have. Gain on disposal 98 and then 4902. Where do you get this one 98 here? What is this 98 actually? Okay, which method that you prefer? The first method or the second method? See? 98 here is share for a current year profit. Okay, the method. I think that the first one is easy. Okay, you are familiar with the first one, the first method. Okay, so that is what you have for a disposal. Yeah? Okay, so any questions that we have here? Do you have any questions? No questions. You want to proceed with the next one? Illustration 3.6. Okay. This time you still maintain that one, yeah? Become associate. This one, this example, we still have a controls over the company. The next examples here, we change this one become an associate from a subsidiaries. Okay, you come from a subsidiaries, it become an associate. Okay, for example, at the beginning you have 70, now minus 30, so you're going to have another 40%. Yeah? Okay, the parent we consolidate the financial statement until the effective date of the disposal. Means that you only prepare a consolidated financial statement up to 30 September only. As the disposal of share will change the status of subsidiary to become an associate. So consolidated up to 30 of September for the financial year end on 2019. Return earning brought forward should include post-acquisitions profit. Okay, the adjustments of gain or loss disposal need to be done in the current year profit. So in this case, we're going to recognize gain or loss on disposals because we don't have any controls now. Become an associate. Okay, the remaining interest should be remeasured. So the remaining interest should be remeasured at to fair value. The difference between fair value and carrying amount of the remaining stake or remaining interest here, okay, is included in the gain or loss on the disposal. So you're going to has a remeasurement gain or loss here need to be included in the gain or loss on the disposals. Okay, after the effective dates of a disposal, the carrying amount of the remaining interest should be accounted using equity methods. Why we need to use equity methods here? Because your shares here is less than 50%. Yeah? So starting from 1st of October, you're going to use the equity method. No more consolidations. Yeah? Okay. We try to look at a little bit only on these examples. Okay. Because this example is a little bit complicated. So we will look at this one first. Okay, so on AB acquire 80% interest, the same example that we are using. Okay, so the COI here. Okay, COI is 14, net asset here is 12 here. On 30 September 2019, AB sold 5 million shares in XY for cash considerations of 15. So 5 million. So 5 divided by 10 here. So you're going to sell 50%. So 50%. The remaining interest is measured at the fair value of 6375, yeah. So you show 50% now, so means that 80 minus 50%, so you only have 30%. This 30% is measured at 6375, yeah. So this is what you have. So look at this one, gain on disposal. This item, and also this item. Look at this one, yeah? Okay, because we want to make adjustment later on that one, yeah? Okay, and then the investments here, so the cost of investments here is only 5250. So 14 actually minus 5250 here. Okay, so now we're going to have a gain in that one, no? 14 minus 5.25. So we're going to have 875 here. So we're going to look at that one. Okay, the reducing in value here is 8754. So this is reducing in the CE. Okay, calculate the gain. Same thing, calculate the gain. So the acquisition date, disposal on 30th of September. On 1st of January, from 1st of January until 30th of September, you have 80%. You have 80%. And then another on 30th of September until 31st December, you only have 30% because you dispose 50%. Yeah? But in terms of disposal, shares in subsidiary, okay, look at two different things. Yeah? Disposal of subsidiary shares. So disposal of subsidiary shares, 5 million divided by 10. But disposal of shares in subsidiary will be the difference here. 5 million divided by 8 million. So it's actually parent dispose 62.5 millions of 62.5% of share in a subsidiary. But in terms of a subsidiary, you dispose 50%. Yeah? But in terms of parent, for the parent itself, we dispose out of that 5 millions, out of that 8 million, the value of parents here, the parent dispose 62.5, yeah. This is dispose in. Look at the word in here. Dispose of share in subsidiaries, yeah, because parents only have 80%, so 5 million from the 80%, yeah. From the 80% is 8 million, yeah. So 62.5, yeah. In terms of the carrying amount of the investment by parent, it dispose 62.5%, yeah. But in terms of share in subsidiary, you dispose 50%. Okay, so COI dispose here is 8750. So another method to calculate this one, you look at your COI minus the investment that you have in segments of financial position. So your COI here is 15 million. Investment that you have here is 5250. So at the end, you're going to have this figure. Yeah? Okay, the same thing. Or you want to calculate using this one, 5/8. This 5/8 here is to find the CA that you dispose. Yeah? CA that we dispose. Okay. So proceed to calculate the gain. Just show you a few minutes. Calculate the gain. Okay. The cost of investments that you have here is 3/8 times with 14. So you're going to have 3/8 here because at the beginning you have 8/8 and then you dispose 5/8. So the remaining that you have here, is 3/8 times with 14. So you're going to have 5250. And then plus with the post-acquisition reserve brought forward. This one is to find the cost of investment, yeah? 5250 plus, because it said that it should include the post-acquisition reserve. This one is to find the CA, yeah, the CA. Okay, so post-acquisition brought forward, this is your return earning brought forward minus the acquisition, time with 30%. Remaining stake that you have 30%, so you have 492. Current year profit up to the disposals date, okay, so 1960, time with 9 months, okay, and then time with 30%, 441. So the carrying amount of the CA of it at the disposal date is equal to 6183, and then less the fair value of the remaining stake. This one is given, 6375 is given. You need to calculate this one. Okay, so the gain on remeasurement that you have here is 192. So this is a gain on remeasurement. Okay. Just going to look at that one, okay. And then the next one, maybe it'll take about a few minutes, okay. Gain on disposal of shares. Okay, for the gain on disposal of shares, going to look at here, sales proceed 15, the cost of investments here is 8750, so this is a gain. You can find this one in your income statement, yeah. Then we make an adjustment here, adjustment for this is a gain to parents, so we need to make an adjustment, the post acquisitions reserve for the RE, okay, and then the other one is for the profit, yeah. So now, okay, brought forward here is 50%, yeah, 50%, yeah. The disposal, the one that you dispose here is 50%, yeah, because you dispose 5 million. 5 million divided by 10 million, so you dispose 10% and 50%. So this one is a RE brought forward, and then this one is minus the acquisition date, yeah. Okay, so 820, current year profit up to 9 months, and then time with 50%. So this is the 50% is the one that you dispose, yeah? Okay. So we're going to have 735, and then plus a remeasurement gain. Then we're going to have gain for group, yeah. So means that you need to calculate two things. One is for the remaining stake, okay, remaining stake, which is 30%. Okay, and then the other one is the one that you dispose. Okay, dispose here is 50%. From the remaining stake, you can find remeasurement gain. Okay, and then from this one, disposals here, you can find the gain for groups. Yeah? Okay, that is what you have here for 887. Yeah? Okay, we just look at the journal entry. Just finish with this one. The journal entry. Okay, for the journal entry, the first one we're going to record for the RE. So for the RE here, we're going to have gain on the disposal of share 820, and the investment in associate 492, and the return earning brought forward 1312. Where to get this one? Okay, from here. Okay, post acquisition profit, interest that you dispose here is 8.2. Return profit that we have here is 492. Okay, so the total return profit here will be 1312. Okay, and then for this one is the shares for the profit. So expense here, all the things here need to time with 9/12. And then gain on disposal of shares here, you're going to have 735. Tax expense, NCI, and then the investment in associate. Okay, for forward and then credit the turnover. So this is the calculations where to get that figure. Profit after tax, allocate to the interest disposed 50%, 735. Okay, this one. Okay, so that is what you have. Okay, and then the next one, the next journal entry, just finish with this one. So this one is to share for the profit for 3 months. Yeah? Okay, this is the shares of profit for 3 months. Okay, investment in associate, now become investment in associate, credit shares of profit in associate, and then this one is to record for the gain on remeasurement. So debit investment and then credit gain on disposals. So this is the statement. So just have a look on this one. We're going to discuss again these journal entries for the next class. So means that the next class, if you have any question, going to discuss on the slide 72, if there is any questions on that one. Okay, so anything that you have here? Any of you have a questions here? Okay, yes, so many things that you have for this one. You need to maybe okay, after your midsem tomorrow, try to have a look on this one. So we're going to continue again for this example 3.6, okay, because it's a little bit complicated. If you have a question, you just study again the 3.6 after your exam tomorrow. Have a look on that one, and then we're going to discuss that one again. Okay. So anything else that you have here? Any questions that you have? For those who want to leave the meetings, you can leave the meetings now. Okay, any of you still want to scan for the attendance, or any questions that you have for maybe for tomorrow exam or anything that you have here. Okay, so I just stop sharing your slide, yeah. So many things that you have in chapter 3, so many formula that you need to remember. Get a little bit confusing, isn't it? You have one more part here for chapter 3. We haven't finished for the first part yet. Okay, please do study again after your exam tomorrow, your examples here. If you have any question, we're going to discuss for the next class. You have to study before the class because so many things that we're going to discuss for chapter 3. After this, chapter 4 onwards, it's a little bit relaxed as compared to chapter 3. So any questions that you have? Okay, for those who want to leave the meeting, you can leave the meetings now. Okay, thank you and good luck for tomorrow exam, yeah. 9:30, yeah. 9:30 until 11:30. 15 minutes is for submissions only. Okay, study again, read to again. Question 1, question 4, and question 5 of your tutorials too, eh? So if you have any problem tomorrow morning, please inform me, eh? Regarding your exam tomorrow. Okay. So good luck for tomorrow. So thank you. I'm still be around if you have a questions until 11:30.